Welcome to FOMO Consulting for your daily AMC Stock Analysis video on Sunday, May 30th. Ladies and gentlemen, this may be the week we blast off. And as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investor is winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel and I would appreciate your support. Let's get into the video. So as always, I want to thank each and every one of you who have liked, shared, commented, and subscribed. It means the absolute world to me. Thank you. So today, more importantly than a quote, we remember. We remember and we honor those who have served and are serving in the armed services throughout the United States and the world. Thank you for all that you've sacrificed so that we may remain free. Thank you. So no doubt the momentum is coming hard and heavy. We've got new apes gathering by the day. I have personally recruited 4 to 5 new apes in my family over the holiday weekend. The momentum is building, and soon we will definitely go to the moon. So quick refresher of the broader market from Friday. Overall, all 3 major indices were up, mixed on tech. But overall, not a bad day, not a bad way to end the week. So let's look at how AMC performed. I think we showed exceptional strength. We certainly showed a lot of consolidation around the $26 level. They certainly tried to press us down 25, 24. We held strong at 26, and I believe we are exceptionally well set up going into Tuesday. But we closed at $26.12, down 58 cents. And a little bit of sell-off after hours, no surprise there. So I want to show you this from last Thursday when we had the big run-up. Overall, had a great day that day, as you can see. But one little thing I want you all to know, because I know everybody's watching that 1-minute chart, right? Looking for the launch, looking for the big push. If you look at the RSI, where I have the red trend line drawn horizontally, every time we press above the 70 line, they sell off. It is a combination of probably institutions, of the algorithms, of day traders, you name it. But every time we pretty well peak above 70 on the 1-minute chart, there is certainly a sell-off. The vertical lines kind of show that every time we peak, there's a quick sell-off, some small, some hard, but certainly it's something to be mindful of as you continue your, viewing and education. As you see, when we go above the 70, it certainly has a little bit of a sell-off. No doubt that's algo is working very hard to keep it below the overall rising trend. So this is one viewpoint over the last 8 trading weeks. AMC has been green on Mondays, 6 of the 8 Mondays. No doubt because of the options expiring in the money, a lot of FOMO, a lot of positive news around weekends. Just Mondays seem to be very good. Obviously, this upcoming Tuesday due to the holiday, we'll treat it as a Monday. But I have no doubt there's going to be a large push. But as you can see, we have had some really good green Mondays, including this past Monday. So I'm looking very much forward to Tuesday and have a very bullish sentiment around that. So let's look on the larger scale. So as you can see, last week was phenomenal. It was somewhat unexpected, at least in my opinion. But let's look at the indicators and see where we're at. So you got the alligator's mouth wide open. Moving average is certainly bullish. MACD is without a doubt bullish. And if you look backwards to the left, you'll see where compared to the baby squeeze back in late January. Most importantly, the RSI needed to cool off. As you can see, we got pressed down on Friday. That was actually needed. It just wasn't sustainable going up to 36. We actually found support, consolidated really for the second half of the day around the 26. So I am, again, exceptionally bullish going into next week. So let's start on this chart. So the red horizontal trend line I've drawn is pretty well the peak that we hit at $36.72 Friday. orange is the level of which we closed, and you can see where we landed historically, and this goes all the way back to 2015. Just absolutely ridiculous. The green line is the level of the late January baby squeeze at $20.36. So you can see how well we actually performed last week. But if you look at the green arrows I've drawn, and these are the levels going back to some of the highest trading points in the $33, $34 range, we certainly are trending to that direction. If you look to the right, you can see the RSI, you can see the MACD. We certainly are approaching those levels, but we still have some room to run. And I believe once we get into those mid 30s, close to 40, the squeeze will occur. So let's look at GameStop in comparison. You can see going up to the squeeze in late January, the RSI got an overbought, and then it had to kind of cool off, right? And then yet again another peak before the big massive squeeze on the 26th, 27th. So let's look in comparison to AMC. You can kind of see a similar pattern. We got into overbought territory. We got pressed down on Friday. We had to kind of cool off. MACD had to kind of cool off. RSI certainly is in neutral. So I believe we are poised for yet another parabolic run this week. Let's look at some news. Obviously, a huge week, 116% up for the week, just ridiculous. Short sellers just with AMC alone, $1.2 billion loss currently based on just last week's movement. So Vandatrack, also a proprietary algorithm, believes that we are not complete with this run. Buying will continue its rally for the next few days. Very bullish. Even some of our detractors, MarketWatch and others, are now starting to get on board. Short squeeze has not contributed to AMC's recent rise. So as we've all been saying, this was not the short squeeze. This was just FOMO buying and probably some delta hedging based on options. So again, we are certainly set up, and S3 obviously has us at a 10 out of 10 score for a short squeeze imminently, although not guaranteed, certainly. So another piece of great news around AMC and the theaters and the business. They've removed the mask mandate for all vaccinated people. That is absolutely huge. That allows even more bullish sentiment around not only AMC, but just the industry as a whole. So it's fantastic news. And that came out, I believe, Friday. So Quiet Place 2 has now opened, is doing fantastically at 47.5 million domestically, 57.4 million worldwide thus far. Obviously, it's staggered openings, but it has absolutely done exactly what most analysts thought it should do, around $60 million. So it's performing very, very well. And again, these numbers are just Friday and Saturday. F9 has opened internationally, not in the US or in Canada, but it is blowing it out of the water at $163 million worldwide. It is opened in the China, Asia, Middle Eastern markets. It is doing phenomenally well. So pretty cool look here. This came off a Vortex trading signal last week. Again, type 3 short squeeze indicator. We've hit this now, I believe, 2, if not 3 times. So in my opinion, it's just a matter of time. As long as we keep buying and holding, we have the FOMO buyers. It is nearly imminent, in my opinion. So quick review of Vortex data, not a whole lot of change, but they did borrow way more shares, about 4 million shares versus what they returned. They are shorting this, and I truly believe the more and more I think about this and look at the data, they just simply can't cover, and I'll show you that very shortly. Volume was 653 million. Institutions ramped up their ownership by 6 on Friday. There are 428 institutional owners. We did shake one short owner out. It was 47 and is now 46. So at least one covered, if not a small one. So we'll see how that goes. So here is the Ortex data. Most recently, you can see where they're very indecisive. The trend lines are kind of hovering in that neutral perspective. They just can't cover because obviously we're buying and holding. So a lot of the methodology seems to be playing out, and they certainly don't have the firepower they had before. So currently we have 493 shares outstanding, right? So this is the ownership breakdown based on Fidelity, as you can see on the left. Institutional ownership 20.6%, that equates to 101 million, and so forth and so on. On Friday, with our volume at 653 million of the public float, it turned over nearly 1.5 times based on the volume. That is absolutely incredible. No doubt that it was a lot of the algorithmic trading, because if we're buying and holding at the retail level, which is the 314 million shares that we currently own as holders, that would tell you that the institutions as well as the FOMO buying was the main driver of that, which is just huge. We need to see this same kind of volume going into Tuesday, Wednesday, Thursday of next week, if not Friday. That no doubt will drive the squeeze. But as you can also see, and again, this is based on 13F filings. Top right, 135 million shares are actually owned by institutions. Again, that's only based on 13F filings. That does not constitute each and every institutional owner. But as we all know, about 133 million shares are on loan. So it would appear that most every, let's just call it institution, is loaning their shares shorts based on that data. But we did lose at least one short owner and shook them out. So bigger picture, you can see where the data trend lines that I've actually drawn. So when we ran up in mid-March to $14.54, you can see how quickly and violently they jumped out of their positions. And you look at the range of which those trends are. You look at this last couple of weeks, where now we are up, spiked to $36, $37. The range is far, far smaller because there just aren't enough shares for them to cover because we're buying and holding. So the methodology, in my opinion, based on this data alone, would tell you that the buying and holding is forcing them to continue to hold because they just simply can't cover because there aren't enough shares to cover. So again, strategy seems to be working. So as of Friday close, 183,000 contracts expired in the money. I believe that's been updated to maybe closer to 190, but nonetheless, that's a huge amount of contracts expiring in the money on the call side. So options, certainly a lot of huge purchases on Friday. The volume out of control. The premiums are 2.1 million just in premiums alone. You look at all the strike prices, they're all in the 30s and 40s. Certainly the puts are starting to come in simply because they believe the squeeze is probably imminent and they're going to ride it down, which is actually a good sign for us. So if you look at the options that that expire this Friday, June 4th, at $39, there is almost 18,000 in open interest. That is huge. More importantly, they've extended the call option strike prices and the puts into the low 70s. 73 is now, to my knowledge, the highest call that you can buy. Possibly other brokerages have it, but that is absolutely huge. They've extended that. No doubt we'll see a lot of options being purchased on Tuesday. So look at the options expiring just on June 18th. So even if we get above 30 this week, likely these will be delta hedged. Market makers will start buying a lot of these contracts at $30. There's 30,000 contracts at the $30 strike. 35, you've got 12,000, and at 40, you have nearly 224,000 contracts in open interest on the call side. That is, quite frankly, the absolute largest number I've personally ever seen on a single stock at that price point. It's just absolutely bullish. So let's end with a quote. A smooth sea never made a skillful sailor. We have been through certainly some rough seas. We are now riding an upward wave. We have certainly developed far more skill riding all of the volatility, the ups and downs over the last weeks and months. We are certainly prepared for what lies ahead. We have our sea legs, and we are ready to take on the next round of rough seas. So as always, I want to thank you for watching. If you found the video informative and entertaining, please like, share, certainly comment, and subscribe. It is a newer channel, and I'd appreciate support. Enjoy your family. Thank you to everyone who is actively serving in the military and all those who have served again. And as always, I hope your life is full of green candles. Take care. I'll see you soon. Bye-bye.